Hello dear viewers, Assalamu alaikum. Today my series of analysis on certain topic of auditing and ISA 570 and 580. We'll discuss along with ISA our analysis, our case scenario analysis on the base of Satyam Computer Limited of India that happened in 2009, and at last we'll review the case of Satyam Computer Limited. First of all, ISA 570, that is going concern. Going concern concept and assumption is included in IS 1. This is disclosed by to be disclosed by management according to IS 1. It should be included in explanatory note or notes to the accounts. This is the assumption where management of the entity has no significant doubt on continuing company's ability in the foreseeable future. That is the going concern concept. That is, company will not liquidate in the near future. This is the main concept of management. The auditors, what should auditor do? The auditor will verify whether the going concern concept was included or disclosed in the notes, and he will verify the matter whether the company is in going concern or not. He will have some procedure, analytical procedure, sampling and balance sheet analysis, financial statement analysis, and after preparation of accounts and confirmation, verification of loan, asset, actual asset and fair value of all assets. Then he can be ensured that the auditor can ensure that the company is in going concern or not, whether there is a going concern threat and the company management already disclosed the matter in their accounts, financial statements. The auditor under ISA 700 will mention in their report. The auditor will insert a material uncertainty clause in their report of ISA 700. Whether management did not include any material uncertainty, but there is a material uncertainty of going concern, if the auditor assumes, in that case auditor can qualify his report under ISA 700. If the going concern threat is pervasive and so material that and the company's management did not include any disclosure or in their financial statement, in that case auditor may issue adverse opinion that it casts significant doubt on company's ability to continue as a going concern. In that case, auditor will issue adverse opinion. Under 580, written representation. Written representation is also like certificate by management. It is to be given by the management. That is, no material uncertainty, material misstatement and no material difference in the financial statement. Assets are realizable, liability is already recorded and to be and the company is able to pay the liability. This is the written representation of certifying no huge materiality material misstatement is there. This is the written representation. Written representation is not a guarantee by management for the auditor not to verify their work or escape their liability. The auditor must have professional skepticism, professional judgment in their work. No liability would be exempted or reduced by their written representation of the management. So written representation is a formality, but it's not certificate by the management that there is no material uncertainty or material misstatement which will reduce the work of the auditor. So the work of the auditor does not diminish under 240, ISA 240 and 350 also. So written representation is to be taken, but would not reduce auditors' liability to do their work. That's all from written representation. Now case-based scenario analysis. Our case is interesting. Case happened in India for Satyam Computer Limited. Satyam Computer Limited was established and incorporated in 1987 in Hyderabad, India. It was a listed company or went for IPO in 1991 and became the fourth largest IT software development and exporter in that industry. It had 50,000 people working there, and it has exported already more than 60 countries, and it was became the business icon. Mr. Raju brothers were the founder of that company. It was going well, but Mr. Raju liked riding a tiger, not knowing how to get up without being eaten. This is the proverb. Riding a tiger is not easy and is not possible for man, but he was so ambitious and so greedy to ride a tiger. After getting all success for his company, he became so greedy. From 2003 to 2008, he became a manipulator. He used to start to manipulate his accounts or financial statement from 2003 to 2008. That is cooking the book. He used to cook the book such way that overstated his revenue and profit more than 80% and 90%. Mr. Raju used to manipulate his country by way of using his personal computer, create a huge number of bank statement, fake bank statement, and cash to inflate his balance sheet position of cash and cash equivalent. He was associated with head of internal auditor who created fake customer ID and fake invoice. Two men were involved in that perpetration. Raju created bank statement and inflation of cash, and head of internal audit make fake or dummy customer and dummy invoices or fake invoice. Raju also made a list of more than 13,000 employees who were fake indeed, and drawn salary on behalf of them. that Raju made a huge cash gain from the company. So after the inflation of dumb inflation of cash and revenue, the, the company became a bubble company. At the end of 2009, the truth of their manipulation or their fake work was revealed by a director named Palapu. Palapu, Mr. So he was did the whistleblowing work. He was a director, and there was a plan of acquisition another company established by Raju, Mr. Raju, a real estate company, and he wanted to gain another profit from the acquisition of his company by the payment from Satyam Computer. But board did not agree and shareholder also did not agree. Raju's plan of acquisition was failed and foiled. But internal auditors were engaged in the corruption and fake work, but external auditors did not do well in their charging liabilities, responsibilities. PwC of India was auditor of the company. They failed to detect or find out 7,561 fake bill over 9 years of previous 9 years of the revelation of the truth. They did not check the bill and did not analyze their risks under 240, 520, 530, ISA 540 estimation and sampling 520. They did not use the ISA standard. They did not work so well to detect any irregularity made by the company's management. This was easy for them to check the huge cash reserve, the existence of cash reserve, but they did not work for the verifying the existence of cash reserve. Huge cash reserve was not deposited in the bank, and this should be raised by the auditor, external auditor. And account receivable and fake invoice was not justified and verified by the auditor under external circulation ISA 505. So this is the auditor's irresponsibility. PwC was banned for 2 years, but later they were exempted for negligence. They are not engaged in fraud like Mr. Raju and his brother. At last, another technology company, Tech Mahindra, bought Satyam Computer after payment of 1/3 value of the company. Mr. Raju was imprisoned for 7 years after for the conviction of manipulation. Review. I have already said that review. Auditor did not check the bill, bank statement, and external circulation. They did not send the letter to the bank, and parties accounts receivable did not check. So this is the irresponsibility and negligence from them. This is the case analysis of Satyam Computer Limited. We'll discuss later next with another case, and also continue our series analysis of ISA discussion. Till then, Bye. Assalamu alaikum.